The following is a presentation of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the June 11th, terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. This is the tool I call, where there is no vision, there is no direction. Now, if we don't have a specific outcome in mind or we don't know where we want to go, we may very likely end up in places not of our choosing. So as we begin Terrific Tuesday, the question is, what is your specific outcome for the day, for the week, for the month? Is it something that's written down? Do you know what your strong reasons why are? Why you want that outcome? Are they strong reasons? Folks, without strong reasons, without strong whys, without a strong purpose, well, it's like driving your car with that empty light flashing, and you will likely run out of gas before you finally achieve your outcome. Henry Ford, he used the art of visualization. He pictured in his mind the type of automobile he wanted to build at the price most people could afford. He created a mental blueprint of his dream car before it was ever put to paper. He pictured great numbers of people buying and driving his cars. It became only a matter of time before Ford's vision became a reality. As many of you know, Ford failed and went broke 5 times before his vision became a reality. You think Henry Ford had some strong reasons why he wanted to attain his vision? He absolutely did. Folks, envision your outcome. Envision it. Have strong reasons why. Never give up, because when you rule your mind, you will rule your world. Let's go check out the world of the markets. Let's go see who's ruling them right now. We've got futures are off. Dow futures down about 114 points, trading at 15,114. The S&P futures off 14 1/4, trading at 1627. NASDAQ futures off 26 points, trading at 2960. King dollar relatively flat. Currency markets all over the place. The euro up, down, all around. Japanese yen, well, we're certainly going to spend some time there. Right now, that's got 178 tick difference in it. British pound, that's got some movement in that as well. How about Goldilocks? Goldilocks trading down at 1371. That's off 1%. Off 1.5% here this morning is silver. Hi-ho silver down 36 pennies out at 21.57. Light sweet crude off a $1.48. That's off 1.5% out there. Down at 94.27. A quick peek around the world out here. Well, over in Asia last night, it was the Nikkei that really spooked things in the marketplace. Well, it really wasn't the Nikkei that started. It really was the Hang Seng. That was, if you took a look at the markets as they were opening last night, Nikkei was trying to stay positive, trying to get positive, was really just slightly off, but it was the Hang Seng that really started rocking things. It finished down 260 points off 1 2/10% out there. The Nikkei itself closing down 200 points, 196, down 1 6/10%. Over across the pond. Oh, wait a minute here. I'm looking at the wrong thing. I'm sorry. The Hang Seng down 260, Nikkei down 196. You've got the DAX right now off 134 points. That's off 1 6/10%. The FTSE, boy, that is really struggling. That's off 102 points right now. That's off 1 6/10%. So let's start off now. What we normally do is we normally start off by taking a look at the EKG of the system, and that's really the 30-minute chart. We're going to first start off by taking a look at the daily charts out here on the futures contract, just to get an idea of where things are going, what it is that you should be paying attention to. So let's start off with the ES Mini. Now, if you're just listening on the radio or your mobile device at TFNN.mob, I remember you can always catch the live stream of the show by going to that homepage of TFNN.com. Over on the right-hand side, you'll see that button, 3 little smartphones on it. Click on that. The show streams live. And, of course, you can get the archive of this on Channel 9 and, of course, iTunes. You can download it and listen to it while you're working out or what have you. Right now, we're taking a look at the ES Mini, and we're focused here on last Thursday's swing point low, when the market made its low before we saw that bounce that started in the marketplace here. And really what we're focused on is the high of last Thursday's swing point, June 6th. Out there in the futures market. That high came in at 16.2425. So far this morning, as the markets have pushed down, only got to 16.25. Still no test. That will be tested here intraday. Should be tested intraday, and that's what we're going to be wanting to pay attention to. Can the ES Mini, can the other contracts, can they actually close inside that swing point? That swing point on, if we take a look at the ETFs, and we'll do that, there's some, I think the SPYs, the Qs, the Dow, they've got high volume in there. So that's where the real release of information is going to come with regard to these markets. Still, at this moment, no test out here in the ES Mini, but that is where it is at least heading to. Now, if you bust it, if the ES Mini, and it's got high volume down there in that June 6th, if the low gets taken out, which is 1596.50, that's going to set up your A to B equals CD down. If that is taken out with volume, says 1559, 1563, that's what's on the horizon. That's when it will set up its next Gartley buy pattern out there, but it's going to have to first contend with June 6th out there. If it touches it, if it closes back above it, if it does in the indexes, the ETFs as well, that'll be saying, quite frankly, the work to the upside is not yet complete. So that is on the daily chart. Test not in, but expect that test today and be paying attention to where it actually closes. Let's go take a look here at the Dow futures. The Dow futures right now, trading off 111, trading off 111 points. They've been down a little bit more than that. If we take a look at the Dow future, we're going to do the same thing. We're going to be paying attention to that swing point from June 6th. Now, the top of that level is 15,049. So far today, it's gotten down to a low of 15,100. So it's got another 51 points before it can get down there and test that level. And that's what it needs to do in order to be able to give us some real information as to where it wants to go. Oh, look, I do believe that this A to B equals CD down is going to be complete. I do believe that the Dow futures are going to get into that 14,636 area. You know, the trend is down. The trend since May 22nd, that key reversal session out there, that really set things in motion during this 6-month unseasonal cycle out here. This is a trader's paradise. We're talking about being able to trade this market in both directions. You've been able to do it so nicely since that May 22nd high that was out there. I suspect that we're going to have many, many, many opportunities to continue doing that to both sides out there. That is a trader's paradise out here. So expect to get some information when the Dow pushes down into that 15,049 level. That is at June 6th area. That's what you want to really be paying attention to out here. If we go take a look at the NASDAQ futures, we're going to really see the same thing. I'm going to switch over and we'll take a look at the EKG of the marketplace. We'll take a look and see whether things are overbought, oversold, or what is happening out here inside the NASDAQ futures. You're dealing with that June 6th swing point. That high is 29.54. So far today, the low has been 29.57. Only 3 points away, 3 points away from testing that high. That's where we're going to get a release of information. If you close inside there, if it takes out the low, I really should say, at 29.1050, that'll set up your 1-to-1 A to B equals CD down. That will then finally get the NASDAQ futures down to that 0.618 retracement level, somewhere around 28.50, 28.60, 28.40, somewhere in that range. That's where it wants to head to, and so we'll look for information from the NQ out there, from the NASDAQ futures. If we take a look at the Russell 2000 futures already trading inside that swing point, or they at least have traded. Now, I've got about a 10-minute delay on this. My apologies for that. I just don't feel like paying the extra $70 or whatever it is just to get the live feed. And so if we take a look here at the June 6th top, that's 980.5. What did it get down to so far? 979.20. Now, it's going to be very important to actually, quite frankly, be paying attention to the Russell 2000 futures. Why? Because it's the first one in. Not only is it the first one in, it's still trading inside that May 22nd swing point. There's, the Russell 2000, which had been the weak link out here, it really is the strong link, and it is really the link for us to be able to grab some really good information from it, because it only made a 0.382 Gartley, and this was a Gartley buy pattern. This is the strongest of Gartley patterns that you could possibly make out there. Gartley pattern just needs an A to B equals CD down. That most certainly occurred out here, and as was doing that, almost made a 1.272 expansion, as well as a 0.382 retracement out there. That, folks, that is strong. That is strong out here. So now, it's kind of it's tested. the June 6th high. It's not trading inside it just yet, but that's another area for us to be paying attention to is the Russell 2000 futures. Now, let's go over and let's take a look at the EKG. Let's go see what the markets here are doing. We'll start off with the ES Mini. What we can see here, extreme sports out here when it comes to trading. It's down in that extreme oversold territory. And if you take a look at the RSI relative weakness, we're going to call it the RWI out here, because when it's at those lows, it's really measuring the relative weakness out here. And the weakness getting down into a level of 17.06 as we came into that trading session at 8:30 here this morning. You did see some bulls try to step in here, little bullish engulfing candle right here. Do you buy this? No, you don't. But does this oversold condition need to be worked off? It does. And if we take a look at the retracements now, and this is interesting, the retracements off of last Thursday's low. That price point, by the way, $15.96.50. The high was put in here, this bearish engulfing out here at 10 o'clock yesterday morning. If we take a look at going from the low to the high, so far the retracement, even though the markets are getting crushed here, it's only made a 0.382 retracement. Not too shabby. 877-927-6648. We'll be right back, folks.
Yeah, it's always better when we're together.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back right now. The Dow futures off 122, S&P off 15 1/4, trading out at 1626.75. When we were going to break, we were taking a look at the 30-minute chart here on the ES Mini, getting an idea where it was at, because it really is a great system for understanding the breathing patterns within inside the market. Things do not go straight down; they don't go straight up. But when you start getting into the oversold or overbought territories, that's when you can start to see things stabilize just a bit. Now, when we open up here, I expect we're going to see a push down further, but it's only done a 0.382 retracement off of that low to that high, so it's not as if things have just fallen apart here just yet. So I do expect over the period of the next several hours, could be a day or so, I do expect that we'll see some move lower and we'll see a bounce higher. This is a trader's market going in both directions here. If you were looking to go short, now is not the time that you need to jump on that bandwagon here. Not that if you are short, that's a good move, but what you want to do here is you want to sell the next bounce inside the marketplace. Will there be a bounce? There will at least be a move sideways. You want to watch the oversold condition get worked off out here. If we take a look at the last time that the market was in this territory here from an oversold standpoint, well, it was at the lows last Thursday, quite frankly. If we take it back just a tad further here, I'm going to do that for you. We're going to come back into the lows as it was pushing down at about 1 o'clock in the afternoon on June the 5th out here. So we can see as it gets down into these extreme areas, in this case here was down at a level of 18.59. The market eventually went ahead and worked its way off. Now, it did that by just simply moving sideways. And the time frame that I'm looking at, for those of you listening on your mobile devices or the radio, we're just taking a look at the time frame of June the 5th, right around we're going to call it really began or got into that oversold territory right around 11:30 in the morning. Went ahead and moved lower, then finally started just simply working its way off by moving off to the side before getting that final push down into last Thursday's low out there where we saw one heck of a nice bounce. Now, out of these oversold conditions, when you start to see a bounce unfold, such as the one last Thursday, you can see that difference versus what was taking place. And, of course, this was during the overnight hours. So during the overnight hours, you're expecting to see small-bodied candles or what have you. But it's just simply the way that the overbought and oversold conditions just simply work their way out here. You want to be paying attention to this. So that means today we've got active trading here for the next 6.5 hours. So it's going to be important to be watching how this area gets worked off after we see at least an additional push lower inside these markets out here. Now, that is on the ES Mini. We've got currency markets that are fluctuating. Let's go peek in on those here. We'll start off by taking a look at, where's my currency? There we go. Let's take a look at I didn't want to do that. Let's take a look at this one here. First, I want to take a look at the intraday chart here for the U.S. dollar, Japanese yen. As we take a look at from its swing point low, this is also back here at 8:30 in the morning last Thursday. It, too, was coming from where? Coming from an oversold condition. We can see the bounce that had. Now, if we go from the low that took place at 9 o'clock in the morning, that low is 94.972 out here. And we take a look at the bounce. That bounce took us into the high yesterday at 10 o'clock in the morning. If we take a look at from the low to the high, you'll see that what has been accomplished is a 0.618 retracement before the move kind of slowed down, and that's all that it really did. It got into where? It got into extremely oversold territory, and it just simply has had to work its way off. It's been doing that ever since the 6:30 time frame. Small-bodied candles just working its way off. We can see here that really trying to create a continuation pattern to the downside. It's got just trading inside this candle here here from 6 a.m., much like gold is doing. We'll take a look at the commodity sector. You've got gold trading down right now, $18, silver up 45 pennies out there, and you won't get any release of information about what the next move inside the U.S. dollar, Japanese yen. Again, we're looking at the 30-minute chart until we see a break of this candle. That low is 96.45.459, and the high of that candle is 97.332. But we can see this just simply working off that oversold territory. Now, if we go back into the daily chart, we'll do that. We'll take a look at the daily chart of the U.S. dollar, Japanese yen out here. You can see it's trading inside it's going to be last Friday's candle, that June 7th area. That had formed a really nice 0.786 Gartley buy pattern. It just got just slightly above the 0.382 retracement yesterday, maybe made about a 50% retracement of that. But it is trading inside the swing point on the daily chart. Says that it clearly can go and wants to go down and test that 0.786 Gartley buy. So eventually you'll see the U.S. dollar, Japanese yen get down to 94.97. 877-927-6648. We get back, we're going to go see how these markets are going to drop, whether there's going to be a pop, and we'll take a look at the commodities. Be right back, folks.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow up 146 points. Trade out at 15,093. S&P down 18. Trade at 1624. Composite off 41 points. Trading at 3433. Russell 2000 down 12.5 points. Trading out at 980. Google off $8. Apple down 350. Microsoft off 51 ticks right now. Intel off 35 cents. Cisco down 20. Leader in the clubhouse to the upside is Quest Core Pharmaceuticals. QCOR. That's the ticker symbol. It's up 31% out here. What do they get? They acquired the right to develop Synactin, and up 32% this morning. You got Catamaran Corp, CTRX, nothing like on a big catamaran during whale season in between Maui, Molokai, and Lanai out there. If you haven't done that trip, folks, you ought to do it. You ought to do that. Catamaran Corp, CTRX, that's up 13% here this morning, up $6 and change. We've got Dole Foods. Speaking of Lanai, I understand that Mr. Murdoch would like to go ahead and buy the rest of Dole Foods out there. If you haven't been to Lanai, folks, if you like golf, first you got to go out there and you got to play that golf course and just simply hang out there. That is a great place. And Dole Foods up $2. That's up 20% this morning on the mere fact that Mr. Just had a brain contusion there. Murdoch. David Murdoch, that's what it is. And, in fact, he owns most of Lanai. He sold it. That's right. He sold that. He sold that to the boat racer guy. In any event, let me just take a look at the market here. You got GameStop up $1.86 this morning. CardioNet, BEAT, is their ticker symbol. They're up 47%. What the heck is up with that? CardioNet provider agreement with United Healthcare Insurance. So a couple of things here popping. To the downside, though, you've got Lululemon, LULU. That's off 15% here this morning. Google just behind them off $8 and change. Amazon, AMZN off 2%, down $5.75. Apple off $5.37. WageWorks, WAGE, that is off 12% this morning. Tesla Motors off $3.50. Goldman Sachs down $2.87. Let's go take a look at these stocks. Now, one of the things that I want to do, because I didn't get a chance to do it yesterday, we had Mark from Colorado. He was calling about the U.S. dollar index, the market, and what I was showing was, and I hope I'm going to do this also during the next break, but Mark, if you're listening, I don't answer your question during either of these shows, please give me a call so we can take a look at the relationship between the currency market and and quite frankly, the commodity market as well as the equity market. And what we're looking at here on this stock chart, folks, this is the S&P 500. So the candlesticks that you're looking at, the green and red bars out here that you're looking at, that is the actual S&P 500. We can see right now trading at 1623.96. Now the top of that swing point from June 6th is 1622.56. So just like we were looking at in the futures contract, it's going to be important to see how that June 6th level gets tested out here. Now, what you are also also looking at is a red line and a black line on my squiggly lines on my screen chart. The red line is the U.S. dollar index, and it's inverted, which means that if it is going down, that it is getting stronger out here. And there has been, and there are at times, a direct correlation between the U.S. dollar index, after all, it is a basket of currencies out there, and the U.S. markets. However, the currency pair that has the better overall track record right now with regard to correlating to the U.S. market is really the Euro-Japanese yen currency pair. That is the one that you want to be paying attention to. I always like to look for divergences in between these currency pairs. You're not looking at where the lines fit on the screen because they're a different scale. A totally different scale. You're really looking at these from a directional standpoint. So if you're trying to use a correlation of currency pairs and what's going on with the market, what you want to use is the Euro-Japanese yen, not the U.S. dollar index when it comes to these markets. Or at least that is Stevie Son's belief because, well, I just simply look at the stock chart. I don't really have a belief. I just look at the stock chart and look for the correlations that are out there. However, it's a little different story when you take a look at the commodity market. If we go over and we take a look at Goldilocks right now, we've got gold trading out at as soon as my screen pops over to it, gold trading down $13 out at $13.73. Let me see here. I think I've got that stock chart hidden here, so we do. We're going to take a look at the continuous contract for gold. Now, what I have on here, I don't have the euro yen, but what I do have is the U.S. dollar index. And the U.S. dollar index, that is the black line. Now, that also, again, is inverted out here. And so you're just simply being able to take a look at correlations between the U.S. dollar index and gold. The red line here is the actual gold miners out there. So that is the correlation. You can see that there are times when these things do not correlate, but it's really for short periods of time out here. The U.S. dollar index, we can still use that for what's going on inside the market. So let's go take a look here at some of these equities that are moving and grooving. Let's go take a look at Lululemon to the downside here. Let's go see what kind of volume we've got coming out of that. That certainly has had a big run. LULU is the ticker symbol. It's been a while since I've looked. Look at that gap down with some big volume. That is on news that the CEO is stepping down out here. Gapping down this morning with wide price spread. We're talking about this closed last night up at its highs at 82.50. Did 7.3 million shares as it made that high. Actually closed at 82.28, got up to 82.50, and this morning already down with 4.5 million shares out there. So let's go see what this thing is going to move down into. It's got this little high volume bar out here. This is where it is headed, which is from March the 19th. 17 million shares, but this thing has got some pretty decent volume in it here this morning. But this is where it's going to head to. Its next set of swing points out here. We'll see if it can find some support, and that's going to be in the $61 area. But this thing is getting some damage done to it here this morning. Again, already 4.6 million shares in only 10 minutes of trading out there. Let's go take a look at Questcor Pharmaceuticals. QCOR is the ticker symbol. Then we'll go back to the commodities. We'll take a look at gold, silver, and oil, natural gas as well, see where those are trading into. Let me refresh this chart because this looks a little whacked out here. Let me make sure I've got all of the data. Good Lord, look at this thing. This thing here is gapping up this morning, but look at this. Here's a wide-ranging bar. So if somebody wanted to know what a wide-ranging bar with accelerated volume looks like, this is wide-ranging bar, accelerated volume to the downside. September 19th, 2012 out here, 63 million shares to the downside. All that it's doing right now is it got back up into the area where it broke down. If you take a look at the top of that candle, it's $50.90. So far, what we've seen here is a high today is $50.21 volume-wise this morning, up with 4.6 million shares, so not bad in the case of volume. But really, as your pilot out here, you'd have to put on your turbulence lamps and be careful because those oxygen masks, they could fall. So this thing here is trading off after the pop here this morning. This is Questcor Pharmaceuticals. That's your leader in the clubhouse. How about that, folks? Let's go take a look here at Catamaran, CTRX. That's our second leader in the clubhouse. Let's go see what this is doing. It is U.S. Open week, isn't it? And Father's Day coming up on Thursday. U.S. Open week begins Thursday, and Father's Day, obviously, on Sunday. I'll get it right. Catamaran Corp. What is this thing doing? It's moving into the area where it last moved down. Give me a moment out here just to delete everything and add a couple of things. Delete all. There we go. And let's add this to it. Okay, so as we take a look at CTRX, this thing gaps down. Now, this does it with wide price spread, 4.5 million shares to the downside. Does this on May the 2nd out here. This had made a high with 997,000 shares, 1.6 million really on April the 30th out here. All that it's doing right now is getting also into an area where it broke down. But volume-wise, though, it's doing it nicely. So it's done 2 million shares going into where it broke down with 4.5 million shares. So this one here might have a little bit of merit with the exception of this high volume low out here that has not been tested recently. That happens to be May 22nd out there, and that is the low of 46.29. So that is still game, and that is for CTRX Catamaran. Let's go see what we have here that is also moving to the downside. So to the downside, we've got Google. Haven't checked in on Google for a bit, so let's go do that. GOOG. As you know, that is the ticker symbol. Let's go. So I think I've got this in my, I should have this here in my standards. I do. So as we take a look at Google, give me a moment here. It's really not that bad out here. Google formed a really nice hammer candle low out here as it was testing its 50-day exponential moving average. It did that on June the 6th. That was Thursday's session out here. So Google has got some very nice, strong support. No real major volume out of this equity on the pullback out here. In fact, if we take a look at the pullback, really coming off of the day prior to its last earnings report. Last earnings was April the 19th, 2013. If we go from that low to the high that was put out here on May 16th, out at 9/19/98. Let me see. No, 9/20/60. I apologize. That is on May the 20th out here. You can see as it made that hammer, it was only doing a 0.382 retracement out here. So yesterday's move up, 2.3 million shares. The day after on Friday, 2.67 million shares after it found some nice support at that hammer low, 847.22. Of course, if it breaks that hammer low, you close below 847.22. If you're long, you're wrong. What that means is that Google will come all the way back down to that April 19th breakout session, right around 766 to 803 in the marketplace here. So with a pullback this morning, really not that big of a deal here. 223,000 shares. Right now, we've got the Dow's off 136. ES is down 17 points out here. The Bulls still not really in charge here yet. But again, we're coming from an oversold condition, so we're going to want to pay attention to any kind of bullish sign out here, and then pay attention to whatever bounce. If the bounce is moving sideways, that spells trouble out there. If we start to see some nice candles and move to the upside, that's where you want to take a look at retracement levels and where to possibly sell into. But we're going to let the market just kind of do its thing here for a bit of time. Let's see. Also moving to the downside out here. Let's go check in. We had Apple's off $3. We're not going to. Let's go take a look here at gold and silver. Let's go see what they are doing. So as we take a look at Goldilocks here, let's get rid of this stock chart. Let's go see. Let's take a look at the daily chart out here. Let's take a look at the daily. We can see it's trading, certainly inside this swing point here from April 16th. Right now trading at 1371. If we take a look at, and as long as it's inside the swing point, folks, it always sets up going down and testing the lows out there, 1321.50. Let's take a look at an intraday time frame, see what it was doing. Let's take a look here at the 120-minute chart out here. If we take a look at the 120-minute chart and go from the low, that 1341.80 level that we're looking at from May 20th out here. That's not the actual low, but if we take a look at that May 20th out here and go all the way up to the high that was put in at 2 p.m. on Thursday, what we can see here, it's made the 0.618 retracement right around 1372 out here, but it's up against this big volume bar at 10 o'clock. I believe that was on Friday. It most certainly was. So, that is a area that is suggesting also that what gold wants to do is go down and test the lows. If we take a look at silver here, the weekly chart, because I've got got a little data feed problem. I've got to call and figure out how to get this fixed. But right now, on the weekly chart here, we can see last week we had that little doji candle, the week when it made that 1.618 smaller butterfly buyout here. And what we've seen is just like in fall when you start to see the leaves fall from the tree, what we can see here is the leaves continuing to fall off the tree, albeit small-bodied candles. That's actually really a positive sign here from a bullish standpoint. So look for silver to get down and test that area of $20.25. If it closes below that, that's where it sets up the nice buy at $17 and change out there, maybe $17.30. Let's go out to I think it's Nashua, Nashua, New Hampshire, to Lou. Lou, thanks for calling. Thanks for holding. How are you this morning?
Fine. I was wondering if you could look at GBP. And see.
I can, absolutely. Yep. Tell us what you're doing and how we can help you.
Not doing anything yet. I'm just wondering if it's a short.
Okay, so if we take a look at the Great British Pound U.S. dollar currency pair, right now it's traveling out at 1.558 out here. And this thing here, let me get rid of it had already formed a nice low, created that little hammer candle out here all the way back in March of 2013, and formed at 1 to 1.2728 to be equals CD when it made a retracement. Actually, looks like what it did was made a little Gartley buy pattern. Let's go ahead and draw that in, see if that's in fact what it did as it came down most recently, and it did as it made a 0.786, a little Gartley buy pattern. Now, on the daily chart out here, Lou, what you want to be paying attention to, what I would be paying attention to is this candle here from June 6th out here, wide-ranging bar to the upside. What it did here, price is really traveling inside this. So the short, you don't see any bears here yet inside this equity. And what it did here on June 6th was it made a 100% move of a move, meaning it got back to the highs from May 1st out there at 156.06. And so and we'll take a look at an intraday chart here for you. But if we take a look at it, it's above the 0.382 level. Really says that the Great British Pound U.S. dollar wants to make a run for maybe 1.581. So I don't see the short position here yet. But I'll take a look at the intraday charts for you as well on the next segment. Okay.
Okay. Thank you.
You bet.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow's off 123 right now. Trading at 15,115. S&P's off about 15. Trading at 1627 now. We did see on the futures contracts, we did see the tests of that of last Thursday's swing point high. That is inside the S&P, inside the NASDAQ. We know that inside the Russell was traveling inside there. So we've got three of the four tests out there. Yesterday we had the test of the Dow of the May 22nd swing point out here. Now, I'm going to quickly go back here for Lou in Nashville. He was calling about the Great British Pound. He was taking a look at, should I take he wanted to know if this was a time to take a short position. Now, not everybody has the tools that I'm using here for my charting packages, but one tool on any charting package that you should be able to find are the moving averages here. So go ahead and put a 30-minute chart up on the screen, Lou, and what I would pay attention to really is that 200 period exponential moving average. You can see prices traveling almost above all of the four-quadrant moving averages that I use out here, 8, 21, 50, and the 200. Of course, these are lagging indicators, but they're still pretty darn good lagging indicators. Inside the 30-minute chart, consider taking long positions as the price crosses through or above the 200, and consider taking short positions when price crosses below the 200. If you take a look at this on the 30-minute chart out here and you come back into the time frame of around May the 9th, right around 3 o'clock in the afternoon or so is where we saw price break below that level. And so that gave you a great. Now you need to understand where to exit your positions. The proper money management. So currencies are not anything to take lightly out here. You got great leverage, but that can also work against you. So make sure you understand. Swing points. Those are ideal areas to be paying attention to for targets. In this case here, always look at that 100% move of a move where you see a significant change in trend inside the Great British Pound U.S. dollar. That took place at about 4:30 in the morning on April the 23rd, and that would have been a target area if you were going ahead. Now, that was to the downside. Likewise, to the upside here, we see that the price got above the 200-day exponential moving average right about in here. It looks like maybe around 10 or so in the morning on May the 29th out here. Came back and was tested a few times. And again, your target would have been that 100% move of a move right out here at about the 6:30 a.m. time frame at a price of right around 155.70. 67 out here on May the 9th, and that would have been one of your spots to have taken a exit. So, Lou, hopefully you can use that as a tool if you're not taking a look at A to B equals CD and expansion patterns and so forth. But go back, and now what you want to do then is go back and check that out on the chart. In essence, paper trade it. Go see if that is a tool that would have worked for you. And if it does work, great. And if it doesn't work, then don't use it as a tool. Now, talking about tools out here, we're going to go to the EKG of the markets. We're going to go look at that 30-minute charts, I should say, and see what's going to happen. We've got 3 minutes, only a minute and 15 seconds left to go in the show. But be paying attention at this 30-minute candle out here. Quite frankly, if you get a close somewhere around 1628, 1627, 75 or so, you're at 1627 right now, it will have formed a hammer candle. And that is a area where you've got some strong support now at the low, which came in during this session here, which would be 1621.50. Right now, it's not a hammer, it's a little piercing candle, but we'll see. When we come back into the next show, we'll come back. It'll be one of the first things that we take a look at, just identifying where the bulls and bears are hanging out in the marketplace. And for you folks, thanks so much for hanging out with me. Remember, you always have this, and that is an amazing power within yourself. And that power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day, folks. Look forward to seeing you soon.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.